94 tons. That's how much gold Burkina Faso produced in the year 2025. Not over a decade, not as some distant forecast, but in a single year. 94 tons of gold, pulled from the ground of a country that many analysts predicted was heading toward economic collapse. A country facing an insurgency, navigating political restructuring, and redefining its global partnerships. And yet, in the middle of all that pressure, something extraordinary happened. Gold production didn't just hold steady. It surged. From 61 tons in 2024 to 94 tons in 2025. That's an increase of more than 50% in just 12 months. Under stable conditions, that would be impressive. Under conditions of conflict, it's historic. So the question is unavoidable: how did this happen? And perhaps even more importantly, what does it mean for the future? To understand the magnitude of this moment, you need some context. Burkina Faso is a landlocked nation in West Africa with over 20 million people. For years, gold has been the absolute backbone of its economy, recently accounting for more than 80% of all export earnings. Gold isn't just another industry here. It is the engine. When gold production rises, the state gets fiscal breathing room. When it falls, economic pressure builds immediately. So when production jumped so dramatically, it wasn't just a mining statistic. It was a national economic turning point. And this surge didn't happen by accident. It was the result of major structural changes, new regulations, and strategic decisions about who controls the country's most valuable resource. Let's start with the big players: industrial mining. Burkina Faso has about 15 large-scale gold mines, mostly run by foreign corporations. For years, they formed the core of the country's gold output. But in 2025, government oversight intensified. Auditing procedures became stricter, export verification systems were strengthened, and the state became a much more active partner, increasing its own equity in key assets and improving how revenue was tracked. Industrial output climbed as a result. But the real transformation came from a completely different sector: artisanal and small-scale mining. For decades, thousands of small-scale miners have worked across rural Burkina Faso, often with just hand tools. Much of this gold was mined informally, sold to middlemen, and smuggled across borders. The state captured almost none of this value. Production existed, but the revenue did not. In 2025, that dynamic shifted dramatically. The government began organizing these miners into cooperatives, expanding registration systems, and strengthening official gold purchasing centers. Suddenly, gold that used to disappear into informal networks started moving through official channels. The result was extraordinary. Of the 94 tons produced in 2025, nearly half came from these small-scale miners. A sector once considered marginal became central to the economy. What was invisible became measurable. What was informal became taxable. At the same time, authorities cracked down on smuggling. Border monitoring increased, and high-profile gold seizures sent a clear message: gold leaving the country would do so through official systems. This perfect storm of policy changes was amplified by global market conditions. In 2025, gold prices hit historic highs, consistently trading above $2,500 an ounce. Higher output multiplied by higher prices created a massive revenue surge, with export earnings reportedly exceeding $4 billion. For an economy valued at around $20 billion, that kind of inflow is transformative. GDP growth hit about 5%, the fiscal deficit narrowed, and even international financial institutions acknowledged the country's macroeconomic stabilization. And all of this happened while the country was still grappling with an ongoing insurgency. Security remains a defining national issue, with armed groups operating in several regions. So, a calculated strategy was put in place: protect the economic engine at all costs. Mining zones received security prioritization, allowing industrial sites to stay operational and artisanal mining to continue. The logic was clear: without gold revenue, the state's ability to fund its security operations would weaken. But the story isn't that simple. War is expensive, and a significant portion of this new revenue has gone toward defense spending, equipment, logistics, and training. Supporters argue this is necessary for national survival. Without security, you can't have development. Critics, however, worry that this heavy focus on security delays crucial investments in social services like schools, hospitals, and rural infrastructure. The gold revenue creates an opportunity, but how it's spent determines the real impact. Then there's the issue of sustainability. With over 80% of export earnings dependent on gold, the economy is extremely vulnerable. Commodity prices fluctuate. If gold prices fall, revenue contracts quickly. Gold is also a finite resource. Mines eventually run dry. A boom period like this can create an illusion of stability, but long-term prosperity requires diversification. Modernizing agriculture, building energy infrastructure, developing manufacturing, these are the things that build a resilient economy. The gold revenue can finance these transitions, but only if it's deliberately directed toward them. We also have to consider the environmental dimension. Industrial mining leaves a huge ecological footprint, and poorly regulated artisanal mining can lead to deforestation and contamination. As this sector expands, managing its environmental impact becomes even more critical. Beyond the economics, this gold surge has reshaped global perceptions. In recent years, Burkina Faso has shifted its international partnerships. Some observers predicted isolation and economic decline. Instead, record gold production provided leverage. Strong economic performance influenced engagement with global financial institutions, and funding approvals followed. The numbers growth rates, revenue capture, deficit management mattered. Performance reshaped expectations. But statistics alone don't determine a nation's future. The deeper question remains, will this gold surge become a foundation for real, structural transformation, or will it just be another commodity cycle peak? History is filled with cautionary tales. Resource booms can finance development, but they can also entrench dependency. The difference often comes down to governance, transparency, and strategic planning. If this gold revenue is used to build power plants that energize new industries, its impact multiplies. If it finances irrigation systems that boost agricultural productivity, the nation becomes more resilient. If it improves education, the next generation gains skills that go beyond just extraction. But if the revenue remains concentrated in security spending and short-term fixes, that transformation will be limited. 94 tons of gold rewrote the narrative for Burkina Faso in 2025. It challenged predictions of decline and demonstrated that even under immense pressure, a country can unlock its economic power. It showed that formalizing informal sectors can have a massive, measurable impact. But it also underscored the risks. Heavy reliance on a single commodity, exposure to global price swings, and a budget that depends on security. The gold has been extracted. The revenue has been generated. The growth has been recorded. Now comes the harder part, turning extraction into diversification, turning revenue into resilience, and turning a record year into a sustained trajectory for the future. Production records capture headlines, but it's transformation that shapes history. That 94 tons of gold is a number heavy with possibility. It opened a new chapter. The question now is simple: what will be built on top of it? Thanks for watching. If you found this story interesting, be sure to subscribe for more deep dives into the forces shaping our world.